Hey everybody, it's Seth and Paul for the Having Money channel. We welcome you back in all over the world, all of our beloved patrons who welcome you into the show. Today we're talking about Clorox. We hope by the end of the video, we're going to shed some light on the financial health of the company that is Clorox. Obviously, Paul, they had an incredible year this year with everyone disinfecting everything, including most of my children's hands, feet, mouths, and chest region. We were spraying Clorox over all of them like it was bug spray. Are we supposed to be doing that? But regardless, you're going to learn not about the chemistry of Clorox, but about the financial health using our 8-pillar analysis. So I welcome in a friend of mine, a dear friend. I think his name it's Paul, right? Paul, how are you? In Mexico, Paul, how are you?
You know, somebody wrote on YouTube yesterday that they're like, every single time you say it's Paul, right? He's like, it gets me every time. That's what he wrote.
You know, I remember that Family Guy. He's like, you know, Paul, this is gonna be really hard for me to say. Is it Bassinger or Kim Basinger? I can't tell which. So yeah, I mean, obviously your last name gets butchered for being so easy. But welcome in. You're in Mexico. You're in your Mexico home, Paul. Obviously, I wish I was there with you, but I'm in snowy Ohio, and we're here. We welcome in all of our Everything Money 8-pillar peeps all over around the world, and the Patrons. We love you. We'll get to more of the Patreon later. But Paul, let's look at Clorox today. We're going to use our 8 pillars. Look at the financial health, the PE, the revenue, the growth, the free cash flow,
the fundamentals.
The fundamentals. Pull it up, Paul. Show them the beautiful Everything Money website.
It's up. Do you see it?
Yep, I got it there. Go ahead.
So, you know, to bring up your comment, everybody who's going to watch this video, we're focusing these videos, the 8 pillars, on fundamentals. We do believe in charts. We do believe in trading off of charts, and we believe in trading off momentum. But for this segment right now, we're going to be talking about fundamentals, which involves all the financials of the company. In chart reading and in momentum, we don't care about the fundamentals. We just care about where's the price going. It's the exact opposite of our fundamentals. We're focusing purely on the financials of the company and to determine, do we look further as a possible investment? We're not going to make our decision just based on these 8 pillars, but it's a great way for us to look at the high level of the company and say, hey, there's some interesting things here, and here's some questions we should ask. And I will tell you more of those questions at the end of the video that you should be asking before making an investment or not in this company.
So number one, market cap. Paul, what is the market cap for Clorox?
So the market cap's 23, and that's not the first pillar. Everyone, the first pillar is PE. And look at that PE, Seth, 18.9. So it's a check mark there.
Yeah, pillar number 1 is PE. We want that under 20. Great job, Paul. Check mark. Pillar number 2 is profit margin. Oh, you did. Oh, trust me.
The good people at Clorox make good money. So anyways, profit margin 16.3%. We want over 10%. Again, it's not a set in stone. We need 10%, but I just put it out there as okay, unless it's a low margin business that I can understand, I like to see a little bit of a margin over 10% there.
Pillar number 3 is, go ahead, Paul.
Well, let's look at here. There's a 2.37% dividend here.
Look at that.
So let's call it $500 million. It's a little bit more than $500 million on this $23 billion company. But if you look at their free cash flow, in the last 12 months, it was $1.38 billion. So they can easily support in the last year their dividend of $500 million. So right now, we have a check on PE and a check on profit margin. And we do also have a dividend yield that is supported by free cash flow. So these are all positive signs so far.
Very nice. Pillar number 3 is revenue growth over the past 5 years.
Okay, revenue growth for the last 5 years. Revenue growth, 5.88 to 7.52. And folks, look at this massive jump last year. 6.13 billion up to 7.5 billion. We obviously know why. They skyrocketed because of COVID. I mean, people were literally like, remember, look at their chart. Remember their chart here. They skyrocketed during COVID. Everyone wanted Clorox. Now they've come back down. The hype doesn't last forever. But either way, we have a check mark on revenue growth over the last 5 years.
Yeah, Paul, I think the question is, will this become a way of life where we're spraying, schools are spraying everything, retirement communities are spraying everything down with Clorox? I would assume that's the case until we get through the weeds of maybe more strains of COVID and the crazes. Who knows, right?
Yeah, I do think that's one of the questions you need to ask yourself before making an investment is this a sustainable level of revenue, or is it just a one-time blip that you have to discount immediately? And, one of the things to look at, actually, let's look at their quarterly numbers. That's a great question, Seth. So if you look, they definitely, so from last year's 2019's quarter ending in December, they did 1.45 billion. In 2020, they did 1.84 billion. So even though they were down from the second and third quarter and fourth quarter, they're still way higher than they were in December of 2019. So, be cautious about this because this is a downtrend of revenue growth, of revenue. That's fine, but I still think, my personal opinion is, I do think we'll go back to more normal times, but I do think there'll be some sort of elevated level for Clorox. Whether it's going to be the 2 billion in a quarter that we see here remains to be seen, but I do think there'll be an elevated level of Clorox in the future.
So, guys, that's 3 straight checks. We're looking at pillar number 4, which is profit growth. Pillar number 4, Paul.
655 million to 1.23 billion. So almost doubling. That's definitely a check. But look at this, Seth. Even going back 10 years, I like this. It's steady, consistent, a little blip here or there, but it's steady, consistent growth and profit. So that's a very positive sign for the company.
Guys, this steady growth over the years, which is Paul really loves, will lead us until our pillar number 8, which is the price to free cash flow, that multiple that everyone asks about. We'll get to that here in a minute, Paul, but let's go on to pillar number 5 is shares outstanding. Want to see these shares going down, Paul. Pillar number 5.
And they are, not by much, but 517 million down to 505. And if you look at this 10 years ago, 531. So they're consistently buying back shares, a few increases here and there, but they're consistently buying back shares. And I don't hate that. You know what I mean? It's like, it's a good way for rewarding investors who've stuck around for the longer term, because they're basically now telling investors 10 years ago, you own a bigger percentage of the company now than you did 10 years ago for owning the same number of shares, which I love.
Pillar number 6 is current assets over current liabilities, Paul.
2.1 billion versus 1.75. So check mark there. So they have enough money on hand to pay off their current liabilities.
Now, even though you're a hemisphere away, Paul, I can feel the heat coming from your chest with 6 straight checks. Let's go to free cash flow. This is free cash flow growth over the past 5 years.
Okay, so on our Everything Money website that every Patreon gets for free while they're members, we have 642 million to 1.38 billion. Definite check mark there. Uncle Seth, do you want to do a little adding together?
Yep. Give me the middle numbers.
716, 910, 810.
810. So the price to free cash flow over the past 5 years has been 890 million, Paul.
Okay, so 90 million, call it 900 million times 20. Since we do a PE of 20, and over the long haul, free cash flow and PE and earnings should be about the same. You're looking at $18 billion, and they're a $23 billion company. So maybe a little expensive. Now, somebody might argue, Paul, their free cash flow is growing a lot. In the last year, they did. But if you think this last year is sustainable, then I think you're going to do fine buying this company at this current price. If you don't think it's sustainable, which I would have reservations about, I think that it is an X on the price of free cash flow less than 20. I don't think that this is a good buy at this time, because that last year free cash flow was a big, if you see here, Seth, 640, 716, 910, 810. They're always in the high hundreds of millions of dollars. And all of a sudden jump up and almost double. That's obviously because of COVID. So I do think you have to discount that a little bit. Is it $1 billion sustainable? Is it 900 million? I don't know. That's part of the further in-depth analysis you need to do before making a decision on Clorox. So I think we only had one X out of all of these. Let's see if yep, right here. So here's our 8-pillar website. It tells you all the checks, all the X's. And it's still a 7-pillar company. That doesn't mean you automatically buy it. It just means that we have to understand this price of free cash flow and why it's different than the PE, and then go from there.
To catch you all up, if you're new, we use pillar number 7, our free cash flow, to find its yearly free cash flow, which is 890. Last year, notwithstanding being exorbitantly high due to COVID. So we take that free cash flow and multiply it by a multiple, usually 20, maybe a higher multiple for high growth companies, a lower multiple for slower growth companies. But Paul, I think this is sort of defined as a slow we still went with that 20x multiple, did we not?
Yeah, we did. I do think it's a slower growth company. Even if Clorox was steady, it's such a big name brand. It's hard to grow these. If you said to me right now, name me a bleach company, what are you going to say?
Yeah,
let's do the Family Feud and go ask 100 people. Name me a producer of bleach. 98 of them are going to say, I can't even name another bleach maker. You know what I mean? Everybody's going to say Clorox. So they own the market, which is awesome. And some would argue that you should pay a higher multiple for very, very safe, high brand names, which I agree with. And that's why we kind of kept the 20. I don't think, though, you should get too excited by the massive increase in profit and free cash flow and revenue because of last year's anomaly of COVID. So do I think this is overpriced? Yeah, a little bit. Do I think that remember, like, guys, people who might worry about it, it's currently at 183 and its peak was 239 in the last year. So it's already down 25% since its peak in the last year. So be ready. This thing could fall to the level that we need to be at, which is, let's see here. If it's at 185 right now, maybe it's below 150, you need to be looking at it. And somebody might argue, well, Paul, its 52-week low is 155. Yeah, that's correct. From a value perspective, the dividend yield would then probably go over 3% or pretty close to it. You'd have a reasonable multiple of cash flow. And I don't think that's going to hurt you very much in the long run with this company.
That's our take, folks. That's our 8 pillars. If this resonates with you, looking at the math, not following hype, you feel free to join our Patreon. The link is in the description below. Paul, our Patreon is so close. Our Patreon page is so close to 1,000 members. Astonishing, considering we only started a few months ago. But in our Patreon, when you join, you do get that beautiful software. You get our 8-pillar analysis in the software. You get access to our Discord channel, where you will see you will get access in the top tiers to Paul, to Trader Mo, their exact trades they do on a daily basis, and all of our portfolios. We do Patreon only exclusive videos just for our patrons, and they love it. The feedback has been incredible, and it's really a win-win. We have, Paul, you have people in your top tier that have made, talk about the options trading with just the top tier patrons alone.
So we have 2 top tiers. One involves Trader Mo, who's doing chart reading and teaching people, and people in that chat are making money hand over fist, and they only pay $50 a month. The people in the top tier pay $250 a month, and we have guys in that top tier making $4,000 and $5,000 a month in options alone, just because we've taught them how to do that. So, everybody in the top tier sticks around. Our retention rate's so high. The great news is we're building this thing further. The website's going to get better. It's going to involve momentum trading. It's going to involve so many other things, real estate calculation. It's really an amazing value at $13 a month. It's growing like crazy. Every time the lower tier fills, we only have 200 spots left in that lowest tier. Once it fills, the price goes up. We open a new tier, the price goes up. So every single time it fills, the price is going up. And I'm dedicating hundreds of thousands of dollars to building this website, and I'm very proud of it. And the sooner you join, the better you are, because you're going to be locked into your price. When the price goes to $30 a level, when you've signed up for 13, you're still getting $13 a month, besides yearly increases for costs and things like that. But you're not going to go to $30. That's the point of it all. It's an immense value. I'm very active. Mo's very active. It's wonderful. Yeah,
Paul, I don't mean to beat a dead horse here, but, like, for example, my mother has about a $500,000 portfolio, and her financial advisor only made a few trades last year and charged her over $3,200 to make those trades. So you can learn. It's sort of a teach a man to fish. You can learn yourself and be you can level up and be one of your family's go-to investment personalities once you learn from Paul. So, guys, we love you. We appreciate you guys watching, everyone all over the world. And this is our take on Clorox. Write in the comments if we're wrong, if we're missing something. Paul and I definitely comment right back. And we do 21 videos a week, 2 live streams, so join us. Thanks for following, guys. We love you. Make sure you tickle that thumbs up for Paul. Love you. Love you, Paul.